Hey, this is Chris Franco, and you are listening to Compound Money Quietly, the CMQ Investing Podcast.
CMQ Investors, welcome to the show. It's great to have you here. You can tell by my voice, I'm a little under the weather. I feel fine, but I sound, I'd say, somewhere between bad and horrible. But hopefully that won't get in the way because we've got a great episode here. I'm going to show you how I go through and attempt to understand a business by reading the 10K. And in this case, I actually read the S1 filing, which is sort of like the 10K. It was the best we could do for the company that we analyzed, that company being Coinbase. So I was doing an Instagram live broadcast and I was taking questions, and a number of you had asked me my thoughts on Coinbase. And I had read this S1 a long time ago, but I went through this process in real time. It took about 10 minutes. And by the time I was done, everyone said that I needed to post this as an episode. And if you like this episode, I'll recommend a companion to this episode at the end of this episode. But enough of the episode talk. Let me get out of the way and let's get to it.
Let's do it, buddy. Big money.
So I have Coinbase's 10K pulled up. And again, if we want to, or it's actually a 10Q. So if we want to know something about a company, we need to know how they're making their money, and that's where you're going to find it. Or you're basically, if you want to know anything about a company, that's where you find it. So let me get Coinbase. I'm going to actually pull up their S1 because that'll be a longer period of time here. So we want to see how my first concern is their business model. You know, one of the main things we want to look at in any business is the business model. You know, is it something that we think, you know, is solid? And, you know, it doesn't take a rocket science to figure that out. It's not like this is it's just important to, I think, mentally get a concept of how this business, what it does and how it makes money from doing that thing. You know, I think of it like almost visually, like inflows and outflows. So revenue. Okay, here we go. In 2019, or 2020, sorry, revenue for Coinbase was 1.14 billion. Okay, net revenue, cool. Now I want to see a breakdown though of how that revenue came to be. Like, what is that from, right? Because I know Coinbase has subscriptions. I know they have transactions. I want to see what percentage, you know, those make up of the total net revenue. Okay, here's what they say about their revenue. They have a transaction revenue, and they say that we generate substantially, here we go, all of our net revenue from transaction fees from trades that occur on our platform. Okay, right off the bat, that's big. And I'll explain why. But they say the transaction fee earned is based on the price and the quantity of the crypto asset that is bought, sold, or withdrawn. Transaction revenue is recognized at the time the transaction is processed and is directly correlated with trading volume on our platform, which has historically been influenced by the price of Bitcoin and crypto asset volatility. We have experienced periods of low and high trading volume, and therefore transaction revenue, driven by periods of rising or declining Bitcoin prices and or lower or higher crypto asset volatility. During periods of rising Bitcoin prices and higher crypto asset volatility, we've generally observed higher trading volume on our platform and across the broader crypto economy. Okay, over the long term, we expect further diversification of market participants to add support for more crypto assets and for crypto asset use cases to expand. We believe these factors will contribute to the diversification. Okay, great. So I'm seeing some comments here, but I want to, like, right off the bat, they just said, and they gave it away, which is good. That's why you read the 10Ks, the 10Qs, the S1s. They make the most of their money comes from transaction fees. And the only way you get transaction fees if people are doing what? Buying and selling cryptocurrencies. So I can't like predict the macro here. No one can. But if for some reason people are less inclined to, you know, buy and sell crypto, what does that do to the net revenue of Coinbase? You know, it crushes it because that's what it really depends on. Now, they do have subscription revenue and services revenue, but as I mentioned, substantially all of their net revenue comes from transaction fees. So you need people to do lots of what? Buying and selling. And when you think of that, I don't know what the future holds or like what the characteristics are of the future crypto investor, but how active do they have to be to make money? So now I want to know this, and I'm just doing this like freestyle for you guys because I want you to see like the process I go through, and I'm not perfect at it, but it is just like a process of being curious. How many transactions, like what's the average amount of transactions per user? So let's see if I can find that. because that'll tell us, how active is like the typical person. And this is, again, guys, why you got to read the 10Ks and just read the filings here before you even think about buying a company like this, or any company, I mean. Okay, here's a little more detail. Since inception through December 31st, 2020, we generated over $3.4 billion in total revenue, largely from transaction fees that we earn from volume-based trades on our platform by retail users and institutions. Now that's interesting. Some of the transaction volumes from institutions. I didn't realize that. Transaction revenue represented over 96% of our net revenue. We've leveraged the strength of our trading business to scale and broaden our platform by investing in our flywheel to launch new products and services to grow the ecosystem, who will interact with more different types of or have more coins that they interact with or use and trade them frequently. So I don't know what the makeup of, I wonder if I could find demographics of the Coinbase customer, but how much of the Coinbase just surge has been driven by stimulus money? Anyone have a sense of that? So they say here they have here's the key business metrics. Verified users, and they have, as of the year 2020, 43 million. Monthly transacting users, 2.8. So out of the total 43, what is it? About 7% are transacting. So you could argue that like 7% of users are generating 96% of revenue. So are there more of those types of people? And what's the process of getting those other verified users to become monthly transacting users? Because monthly transacting users needs to be, that's critical, right? Then there's assets on platform, trading volume. And here we'll get some definitions down here. Trading volume, I'll read them to you. Okay, verified users. A verified user is retail users, institutions, and ecosystem partners that have registered an account on our platform and confirmed either email address or phone number, or that have established an account with a username or a non-custodial wallet application as of the date of measurement. Here we go. Verified users are an indication of our scale and represent a potential revenue opportunity for us, right? Because they could convert them. These customers have demonstrated an interest in our platform or direct intent to transact with crypto assets. Verified users represent the top level of our customer acquisition funnel. We believe we have an opportunity to engage verified users and convert them to MTUs, which, as we now know, are monthly transacting users, and do this by marketing our growing suite of products and services. Verified users may overstate the number of unique customers who have registered an account on our platform, as one customer may register for and use multiple accounts with different email addresses, phone numbers, or usernames. Yeah, you could see people doing that to get like rewards and bonuses and things like that. The monthly transacting user, as we mentioned, is someone who actively or passively transacts in one or more products on our platform at least once during the rolling 28-day period, ending on the date of measurement. MTUs represent our transacting base of retail users who drive potential revenue-generating transactions on our platform. Revenue-generating transactions include active transactions, such as buying or selling crypto assets through our Invest product and spending on the Coinbase card, or passive transactions, such as earning a staking or savings reward. MTUs also engage in transactions that are non-revenue generating, such as send and receive. Interesting. Give this guy. This is really interesting, guys. You ready for this? So going down to trading volume. So they need trading volume, right? Like that's a critical piece here to them making money. So they say trading volume on our platform is influenced by the price of Bitcoin and crypto asset volatility. In periods of high Bitcoin price and or crypto asset volatility, we've experienced correspondingly high levels of trading volume on our platform. High Bitcoin price, right? And it's like what Warren Buffett says, rising prices are a narcotic. People are chasing that rising price. It's really interesting. And it's kind of like like a cascade. Really interesting. Okay. That would also lead, if Bitcoin starts going down and keeps going down and down and down, that's based on what they just said there, that would seemingly not be that good for, for getting that transaction volume up, or trading volume, which is directly tied to transactions, and transactions are over 96% of the revenue. So I'm not going to read any more because I think that's not as useful for us. I just want to kind of summarize what I've taken out of this and why I would immediately just filter this out of companies I'd consider buying. This business model is just too, it's not on enough solid ground, in my opinion. There's so many things that could factor into why people are buying and selling crypto. And while I don't think crypto is going anywhere, I just wouldn't want to put my hard-earned money on a company that's so dependent on a high amount of trading volume. because I think that's something that could, very well change, even if crypto becomes more useful and valuable in society. This business depends on this sort of like feverish buying and selling. And I think there's more reasons why that could slow down than there are for that to increase. And I could be totally wrong. It's just not something I'm willing to consider to be like a high probability bet. And that's the only time I'm looking to buy an individual name is when I think there's a high probability, a subjective probability of achieving better than average performance over a 10-year plus period. So that's just my take on it, guys. And I really just want to encourage, like, for all of us, because I taught myself how to do this, and I did because I realized this was what you have to do. And so, one of the things we can help ourselves doing as investors is just avoiding making bad purchases. You don't have to invest in everything that you see. And I think if you're not getting comfortable reading through these 10Ks or 10Qs or S1s, you're really, like, just in this last, 10 minutes of reading the Coinbase S1, we have enough information here to make an informed decision, and a decision to not buy, I should say. I think when you're leaning in towards like what's going to make the next pile of potential candidates, obviously you'll spend more and more time and you want to analyze the competitors. But just from looking at the business model, that business model is not strong enough for me. I'm investing in future cash flows. And so a business that's revenue is so dependent on this thing that could slow down. As we said, let's compare this to Facebook, because Facebook has like 90% of their revenue comes from advertising, but there's no slowdown with that, right? Like I can prove that. I can't prove that about transactional volume or trading volume. And anyway, we picked up some good nuggets here. And what's cool with reading these is over time, you'll start to see how they make connections to other things you're reading. Like we'll remember this when we're reading something else, whether today, tomorrow, or, a year from now. And it just helps you get helps me really understand why Warren Buffett and Charlie Munger promote, reading the 10Ks, because it's what you have to do. It's the homework. All right, CMQ investors, I want to give a big shout out to one of our fellow CMQ investors, Dave J. Johnstone Drums on Instagram, if you're looking for him personally. But Dave had told me that episode 46 was one of his favorites. He shared it with a lot of friends. That was a live episode where I start off by going over how to read 10K reports. If you're interested in learning more about 10Ks, and I highly recommend you do and learn, just how important they are and how you can make them part of your investment process, that's a great episode. It goes very well with this episode. The last thing I'll say, and I always try to say this at the end because it's important and it helps a lot, is if you could leave a 5-star rating on Apple and write a written review on Apple Podcasts, that goes a long way. It helps so much. My doctor tells me if I can get 5 people to write a written review, my voice will come back. All right, on that note, thank you again for listening. This has been Compound Money Quietly, the CMQ Investing Podcast. My name is Chris Franco. Thank you for listening. We'll talk soon.
Great voice, buddy. You sound like a real loser. Don't buy the dip. Buy some cough syrup, idiot.